Welcome back. It's time now to take a look at the top business stories. Dubai launches real estate investment trust. Abu Dhabi Commercial Bank sues Credit Suisse Group and Standard & Poor's. And we talk to the president of the Philips Stein Group about competition in the luxury goods sector. Asian markets closed mostly higher today amid signs that tensions had cooled across the Korean peninsula. The GCC markets continue their mixed run, while the UAE bourses ended higher at the close of the trading week. The DFM gained 0.5% to close at 1,682 points. MR Properties recovered to climb nearly 1%, while Arab Tech continued to fall. The company's shares were down over 0.5%. Emirates NBD was up 1.5%, while DO fell 0.75%. 77 million shares were traded, valued at 113 million dirhams. And over in the capital, the ADX gained marginally to close at 2,756 points. Aldar Properties recovered from losses earlier this week. The company's shares gained 0.5%. Etisalat also climbed 0.5%, while Abu Dhabi Commercial Bank fell 0.5%. Dana Gas dropped 1.5%, and TACA dropped 0.75%. 44 million shares were traded, valued at 83 million dirhams. For a further analysis of the markets this week, we're now joined by financial analyst Bruce Powers. Welcome back to the show today.
Thank you for being here.
So the DFM has actually dropped to just underneath the 1,700 mark. What sort of turbulent times do we have ahead? Do you think they are going to be quite sort of rough times ahead, do you think?
Well, we've been in a corrective mode in the DFM, and we still are. What happens over the next week will help make the picture a lot clearer. But the larger uptrend is still in place. So far, we've seen a retracement that is normal and what could be expected after a rise of a little over 22% from the bottom that we hit in mid-August. Okay. Now, so far, we've held support of the 200-period exponential moving average and the 38.2% Fibonacci retracement level on the index. So this is showing strength in the market.
Okay.
This is in an area of support with a low of 1667. If we break that low of 1667, then we're likely to see more accelerated downside. If not, then we could see a sideways choppy move for a while.
Okay, right. Now, Prince Alawid bin Talal's Kingdom Holding has reportedly bought $500 million worth of General Motors shares. I mean, they're really going to expand their sort of reach, isn't it? Their global reach.
Well, Prince Alawid has a history of buying into large blue-chip companies with global brands, especially when the valuations are depressed a little bit. So he's been doing this as part of his investment strategy for many years. Kingdom Holdings holds a number of blue-chip global brands, including Citigroup and Apple and PepsiCo, among others. Obviously, he sees value in the IPO price of $33 a share. This investment gives Kingdom Holdings 1% of GM. The stock closed yesterday about $33.45, so that's up 45 cents from where he bought into the stock.
Right. Thanks so much. That's all we've got time for. We'll see you next week, Bruce.
Thank you very much.
Abu Dhabi Commercial Bank has reportedly sued Credit Suisse Group and Standard & Poor's, among others, for allegedly providing misleading information on an investment product. Bloomberg has reported that the lawsuit filed in New York alleges that Credit Suisse failed to disclose conflicts of interest and other material information and provided misleading information when structuring, marketing and selling an investment known as Farmington to ADCB in 2007. The lender also alleged that Standard & Poor's provided inaccurate investment-grade ratings to assets associated with the Farmington structure. The UAE's first real estate investment trust, RIGHT, has been launched through a joint venture between Dubai Islamic Bank and French fund management company Eiffel Management. Emirates RIGHT will be based at the DIFC and is looking to attract Sharia-compliant properties. One of its key features is that at least 80% of the company's net income will be returned to shareholders annually in the form of dividends. Owners of real estate may also invest by contributing their assets in exchange for shares in the REIT, or make cash contributions that will be used to acquire further assets. Now, a need for retailers to focus more on online marketing is crucial in the UAE, given the demographics of the country's retail industry. Panellists at a discussion held by the Dubai School of Government on the UAE's retail environment say they have a positive outlook for the industry over the next 2 years. Despite concerns surrounding a lack of online marketing, customer loyalty and turning footfalls into purchases, they believe an increase in tourists will propel growth in the sector.
One of the biggest challenges faced by retailers today in this region is to become more savvy about web-based sales and internet information. And because of the demographic profile of this region, which is quite young, very young, I believe that most of the retailers and of the mall owners are going to really have to embrace this in a much greater way than they have in the past. I see strong tourist growth in the market again. I think that that'll also help all of the retailers. It's sort of the icing on the cake. The local marketplace is always very important, and the loyalty of that local market is crucial for the success of the retailers. But downstream, I think also the tourist is going to come back.
GCC markets had a mixed run today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, we talked to Will Stein, the co-founder and president of the Phillips Stein Group, about competition in the luxury goods sector.